This program is brought to you by PennyMac TPO. Visit tpo.pennymac.com to learn more about becoming a partner and starting your journey to greatness. With the people, products, and technology to take you there, it's why they say at PennyMac, greatness lives here.
Welcome to The Interest. I'm Sarah Wolak, and if you thought the Fed would ease off on its efforts to tighten monetary policy, then think again. According to the minutes of the Federal Reserve September meeting, members would rather err on the side of doing too much than not enough. What that means for the mortgage industry when they meet again in the next few weeks is anyone's guess, but the tea leaves are definitely pointing in the wrong direction. We'll have more on that later, but first, with prices falling, first-time homebuyers are finally returning to the market. According to a report from Zillow, first-time buyers make up nearly half of the market at 45%. This is a huge swing since their share of the market had fallen because of older buyers who were able to tap into their equity and outbid them during the pandemic. But the market has been cooling and housing prices have trickled down, leveling the playing field for those first-time buyers. And of course, when we talk about first-time buyers, we're largely talking about millennial and Gen Z customers. On the most recent episode of Gated Communities, NMP staff writer Katie Jensen learns how experts are working with these younger homebuyers who were getting priced out.
But I love just the fact that they're stepping out and they're not, for many of them, letting fear of certain market conditions sway them.
In a market where most buyers are concerned about inflation, low inventory, and soaring interest rates, there's one group that's fearlessly moving forward with home buying, and that's Gen Z.
I'm seeing buyers that are as young as 21, 22 years old, and they are looking to get into the market. Now, for most of those buyers, many of them are looking at it from an investment side.
Senior Vice President of Meadowbrook Financial, Rajan Ramdahal, says that Gen Z borrowers are not as naive as some would believe.
What I'm seeing are that younger generation, Gen Zers, are also very savvy. And so they're looking at ways to invest.
But wait, what about the fact many Gen Zers are pulling out of their housing contracts?
So I think the reason why we're starting to see or have seen a lot of people back out of contracts is because the emotion isn't tied into it. They're looking at it from an investment standpoint.
We keep hearing how Gen Zers are hurt by student loan debt and high rents. But is this true for everyone?
If you're going to live on your own, now you have rent that's kind of cutting into your savings and the money that's available to be able to deploy into putting as a down payment or buying a property.
Ramdahal tells us what kind of loans these borrowers are looking for, mainly non-QM.
Gen Zers that are entrepreneurs, that are investors, day traders, whatever it may be, there's capital that's there, but there are not a lot of traditional loan programs that are going to provide them an opportunity to buy homes.
FHA loans are also a very popular option for first-time investors and first-time homebuyers.
I don't have to wait to put down 20% to buy a property.
One of the reasons Ramdahal is so popular with the Gen Z crowd is because he uses social media to get many of his leads.
So I get DMs and private messages all the time with people that are maybe scared to pick up the phone and make a phone call, but it's easier for them to see a video and send a message.
If you want to get more Gen Z leads and start working with the future generation of home buying, listen to Gated Communities, the Mortgage News Network's podcast on working with underserved borrowers, available wherever you get your podcasts. For the Mortgage News Network, I'm Katie Jensen.
Thanks, Katie. It still feels like the odds are stacked against Gen Z when it comes to what's happening with the economy. We'll have more coming up.
Don't miss the largest regional mortgage show in the nation. The New England Mortgage Expo returns to Mohegan Sun in Connecticut, January 12th and 13th. See us at www.nemortgageexpo.com. Start your year with the best connections in the industry. Dozens of sessions, scores of exhibitors. It's where success is written every hour. www.nemortgageexpo.com.
Welcome back. Inflation is rising despite aggressive Fed efforts to get the price increases under control. Prices consumers pay for a wide variety of goods and services rose more than expected to 8.2% in September. That's still lower than the 9% inflation in June, but still hovering near the highest level since the early 1980s. The latest numbers show that shelter costs rose by 0.7% and are now up 6.6% from a year ago. The food index rose by 0.8, and medical care costs rose a full percent. This all comes just weeks before the Fed meets again to talk about more rate hikes. The minutes of the Fed's board meeting in September signal more rate hikes in the future. Fed members said they continue to expect ongoing increases in the target range in order to achieve their goal of 2% inflation. Sadly, today's CPI numbers show that we're not there yet, and housing costs continue to be a big reason why. Mortgage rates went back up today, with experts pointing to fears that the Fed doesn't have inflation under control. The average rate for the 30-year jumped a quarter point and is approaching 7% at 6.92. We'll be right back with what else is interesting today.
This program was brought to you by PennyMac TPO. Visit tpo.pennymac.com to learn more about becoming a partner and starting your journey to greatness.
Welcome back. Here's what else is interesting today. The U.S. Chamber of Commerce and the banking industry want to limit the CFPB's ability to crack down on discrimination. A federal lawsuit claims that federal rules allow the regulatory body to target specific examples of discrimination, like redlining. But the agency is overstepping that power by cracking down on policies that have unfair outcomes, even if they're applied fairly. The CFPB declined to comment. For more on these and all of today's top stories, go to mortgagenewsnetwork.com.